We will begin with the keynote session, and we are truly, truly delighted to have the presence of none other than Srimati Madhabi Puri Buch, Chairperson, Securities and Exchange Board of India. So first up, can we have a huge round of applause to welcome Srimati Madhabi Puri Buch for joining us right here at the Global Fintech Fest 2022. Thank you so much, ma'am, for joining us. And as we get the keynote started, I'd also like to invite Shri Srinivas Jain, Executive Director and Head of Strategy, SBI Mutual Fund. Thank you very much, sir. Thank you, ma'am, for joining us this morning. We're about to begin with a keynote on Indian capital markets, strengthening the vision, global, inclusive, and green. So first up, as we set the tone, I'm going to request Mr. Jain to take it forward from here. Over to you, sir.
Very good morning to all of you. Yeah, after a very power-packed day yesterday we had with central ministers, union ministers, policymakers, fintech leaders, and multiple launches, we are kicking off today with another most anticipated keynote of the event. It's my honor and privilege to welcome Ms. Madhabi Puri Buch, Chairperson SEBI, for her keynote address on Indian capital markets. Madam Madhabi Puri Buch has an illustrious career of spanning capital markets, education, and of course governance. She's been with SEBI now for over 5 years, earlier as a whole-time director and now as a SEBI chairperson. You all must have seen in a recent interaction with Vicky, which happened a week ago. She's kind of laid out the roadmap for the Indian capital market, a lot of which we would like to also hear from her today. It was one of the most talked about talk of her in recent times. She's been very encouraging always for us in terms of the consultation process, and when we reached out to her, she was gracious enough to come and talk to youngsters here, the fintech, the whole fintech industry. More importantly, her focus on data and how data kind of helps in decision making. She's already doing quite a lot that in SEBI. We've recently had a datathon sponsored by SEBI, which we'll talk about a little bit more post her keynote speech. And we have some winners of the datathon, which we will announce. Without much ado, we are all keenly looking forward for your talk, ma'am. Welcome you on the stage. Thank you very much.
Thank you very much. I presume this is on? All right, excellent. Thank you very much for this opportunity to be here. It's a pleasure to be here. At the outset, let me confess my bias to all of you here. I love the fintech world. There was a time 20 years ago, we didn't know it was called fintech then, but when we set out to set up the country's first and largest online share trading platform, it was perhaps the most exhilarating experience of my life professionally, and the whole feeling of creating something new, something completely radical, and something that completely changed the paradigm of how investors interacted with the stock market was an extremely rewarding experience. And I think to some extent, this picture to me says it all. The reason it was so much fun, the reason it was so exciting, was that it facilitated the democratization of access to the market. I still remember 20 years ago, after the launch of ICICI Direct, I was in Hyderabad, and I wanted to meet some of our clients. And of course, my team wanted to introduce me to the large clients, and I said, no, I want to meet a small client. And when I met this gentleman, he spoke only broken English, but what he said to me was, thanks to online trading, I am no longer dependent on my broker to pick up my phone call, and particularly on a volatile day when he has large investors to satisfy, he never picks up my call. But the online system is there, and it's always available to me on any day at any point in time. I think that was the first day that I truly understood the power of technology and the power of fintech and its ability to facilitate financial inclusion. So to me, the entire industry is really exciting, and not only exciting but exhilarating for this reason and this reason alone, that it's going to completely transform the landscape of financial services with the entire ability to bring the cost of delivery so low that, in effect, businesses can afford financial inclusion. It is not something that has to be mandated to them. It just happens because it makes the business so much more viable. So this is why I love the fintech world. Where do I need to point to get this done? There? Yeah. And of course, my faith in the entire startup ecosystem. I think there is no discussion now, no debate, that India is really rocking. And that's thanks to the entire startup ecosystem, whether it is the entrepreneurs, or whether it is the funding mechanism, or whether it is the entire infrastructure now which facilitates this kind of innovation. In this drive for innovation, which is at the core of the fintech world, I want to share some basic thoughts with you. Most entrepreneurs, when they go for funding, they are asked the question, what problem are you trying to solve? What is the need that you are trying to fulfill? And indeed, that is the starting point. Sometimes this need is an articulated need of the consumer or the investor. Sometimes it's a latent need. The consumer doesn't even know he needs it. But when it is presented to him, he suddenly realizes how powerful it is, and then you have adoption that follows and the wonderful hockey stick effect that we've seen in many of the businesses. So at the core, there is the question of fulfilling the need, the unmet need of the consumer. However, with my regulator hat on, here's what I would like to say. In meeting that need, by construct, since it is new, since it is innovative, the chances are that there will be a regulatory gap in terms of governing or regulating that product or that service or whatever it is that is meeting that need of the consumer. It's almost by construct. If it is new, it has probably not even entered the heads of the regulator, let alone be captured in the regulation. And the reason for that is that in our country, our regulation is a hybrid regulation of principle-based and rule-based. If the regulation was merely principle-based, then every conceivable situation would get covered under it. And in many ways, there would be no regulatory gap. But since we have a hybrid system in our country, with a fair amount of emphasis in our judicial system on the rules part of the regulation, it is natural and expected that there is likely to be a regulatory gap when there is something new and innovative that happens in the market. Now, it's up to the regulator to keep pace with that. In the past, we've been a little late to the party. It is our intention now to narrow that gap as much as possible. But that gap, as I said, structurally will continue to exist. And therefore, the question arises that what does the ecosystem, the startup ecosystem, do about it? How do you think about it? And there, I think that both the entrepreneurs as well as the people who are funding these entrepreneurs could be well advised to think about the principles that guide a regulator. So while there is no extant regulation on a particular subject, if you think about what are the key principles that a regulator will follow when they finally show up and regulate it, you are already ahead of the curve. You're anticipating what the regulator will say and do, and if you're already baking that into your business model, then it's a check, 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 and you will not have business model disruption when the regulator finally shows up. So to share some of these principles the way that SEBI looks at it, I'll begin with the question of anonymity. A lot has been said about the crypto world, and going forward, the technology will facilitate, the central bank's digital currency will facilitate a certain ecosystem for tokens, for cryptos. It will happen in due course. The question is, as you are thinking about it, you need to understand that while on social media, it's quite all right. I can go on social media and call myself, I don't know, Sunflower 500. It's okay. But in the fintech world, when it comes to financial services, anonymity is not something that the regulator is ever going to permit. So if you start your business model on an assumption of anonymity, and if that is a key selling proposition in your business model for your consumer, it's not going to last. When the regulator shows up, and probably now sooner than later, it will not be okay, and then you'll have a problem of saying, oh my God, this was the regulatory risk, but you know that to begin with. So anonymity in the financial world is an absolute no-no, and that's the first guiding principle in your checklist, whether you're an entrepreneur or a private equity funding entity. The second is around transparency. So this is really about the whole concept of saying that a regulator's principal job is to ensure in the markets that investors make informed decisions. Nobody argues with that. The question is, for an investor to make an informed decision, he must have information. Without information, how will he make an informed decision? And therefore, the issue of transparency is key. If the regulator senses that there is inadequate disclosure, then the question is the investor being misled? This is a little bit more aggressive form of the same issue. Is the investor being conned? So again, if your business model is woven around a black box, okay, and a lot has been said about, in the markets now, I know there are many people working on algos. A lot has been said about, is SEBI in favor of these algos, against these algos? SEBI is not in favor of or against anything, provided there is transparency, disclosure, and nothing which is misleading. So if somebody is claiming that their algorithm is delivering 350% return, first of all, I'd really love to meet these guys, because I'm wondering, why are you telling the whole world about it, right? Even Warren Buffett doesn't deliver these kind of returns. You should just be making all of this money on your own. But if you are claiming, here's what SEBI does about it. SEBI engages with these people and says, okay, and this is not a futuristic thing. This is actually what has happened over the last many months. SEBI says, okay, you are claiming 350% return. Okay, very good. How do you arrive at this number? Someone says we do simulation. Okay, very good, sounds good. So let's recreate the simulation. What is your input data? Must be market data. Okay, our exchanges are here, they have all the market data, here's the data. Now let's run your algo and simulate it for the last 1 year. You got it? Answer was no. I'm saying no, but you just said that's what you do. That's just what you said. That's how you arrived at 350%. So let's simulate it again. You simulated it yesterday. Let's simulate it here with SEBI and the exchanges watching the simulation. No. So, what does the regulator want? Regulator says, let there be an independent assessment of the claims that you are making to the investor so that nobody can blame you. In fact, it is for the protection of both the investor and the offerer of the service. Nobody can blame you that you are conning the investor, because here is somebody, the exchange is right here, they have all the data. They are now going to validate your simulations and say, yes, this is really a fantastic algo, it really delivers 350%. Okay. Then of course, we are quietly told, no, it's 350% under certain market conditions. Now, are you being conned, right? So, if your business model is going to rely on a black box which is not open to sunlight for disinfecting, if it is not capable of being validated and audited, and your claims cannot be audited and validated, it cannot be permitted. But if it can be audited, can be validated, nobody is happier than us to facilitate new and innovative offerings in the market. So this is the second checkbox. One was anonymous, the other is validation of your claims. If you're unable to validate, your business model is under threat, because when the regulator shows up, this will not be acceptable. The third is back to my favorite slide. When it comes to financial inclusion, most regulators in our country have very, very supportive regulation. Okay? So for instance, let's say SEBI itself, in the mutual fund industry, up to 50,000 rupees, cash transaction is permitted. Up to a certain limit, PAN number is not required. You just need something called a PECRIN number. So when it comes to financial inclusion, the whole objective of the regulator is aligned with you. So if you are operating at the bottom of the pyramid, truly operating at the bottom of the pyramid, it's not just a nice tag to have, and you can demonstrate that these are the kinds of limits that you have in terms of your offerings, the regulator is more than delighted to be supportive and to make it easier, simply because that is an important part of our agenda always. So this is the third checklist. If your business model facilitates financial inclusion, then to that extent that you have those citizens within your fold, the regulator is bound to be very supportive. It will be a sustainable business model. This is one of the key requirements of every regulator. I refer to it as the Abhimanyu complex. If you have a business model which relies on the assumption that once the customer is in, it's very hard for him to get out, we don't like it. So building barriers to exit, again, if your business model relies on that, it is unlikely to find favor with the regulator. It's a very important principle that we follow. And therefore, as I said, when the regulator shows up, you will be vulnerable to regulatory risk, because the regulator will say a person who has ease of entering has a right for ease of exit. If you make it hard for him to leave, we will not permit you to make it easy for him to come in. We do not want Abhimanyus in our market. So this is an important checklist. Check in your list. Please ensure that your business model does not rely upon कि वो एक बार आ गया बकरा तो उसको हम पकड़ के रखेंगे, बाहर नहीं जाने देंगे. This is again a very, very crucial piece, and I think most of you here are very familiar with the concept, but let me articulate it as a principle. In our country, very different from almost every country in the world, we not only have a stated objective, but we have an implemented evidence that the infrastructure for innovation will be a public good. Whether it is Aadhaar, whether it is UPI, whether it is account aggregator, whether it is the health stack, whether it is anything. The rails will be a public good. Private innovation needs to build on top of those rails. If somebody again has a business model where their presumption is that they are going to own the infrastructure, you're setting yourself up for a rude shock subsequently. It's good, it's ambitious to say we want to be the infrastructure, but as you have seen in our country, that's not the path that India takes. The Reserve Bank of India has demonstrated it so beautifully through these various mechanisms. SEBI, on its part, given the way that we look at the market infrastructure institutions, given the way we look at data. So why in this conference was our emphasis on data, and we requested the organizers to organize this datathon? Because for markets, the markets thrive on data. And we have ensured by actually issuing a circular that every piece of data which is there in the markets on account of something that the regulator has said must be disclosed has to be available free of cost and in a machine readable format and in an easily downloadable format and cannot be charged for. So as an example, we had a very lively conversation with some of our exchanges where the discussion was, well, if the investor wants the data, we are happy to give it free, but if a service provider, let's say an investment advisor or one of the new Fintechs want that same data, we will charge for it. I'm like, okay, be my guest. So from tomorrow, SEBI will issue a circular saying that all data, instead of being uploaded on the exchanges, will be uploaded on SEBI website, and we will offer it free. अब आपको जो करना है आपकी मर्जी. So what is it we are saying? For us, data is a public good. It is public infrastructure. No private person can claim ownership over this infrastructure. We ensure that it is made publicly available in any form or manner. You want a feed, you want this, you want API Connect, everything is free. Nobody can charge you for it. If they do, please let me know. Please send a mail at chairperson@sebi.gov.in. So this is the path that the regulators in India are taking. So again, on your checklist, if you are attempting to claim that you will own the infrastructure, it's very unlikely. By the time we show up, we will not permit it. This is a somewhat difficult principle to articulate. I call it structural vulnerability. So, as you know, all the regulators, financial regulators in the country, we meet often on issues of financial stability. And we discuss not specific cases, but we discuss structural vulnerabilities, concentration risk, technology risk, governance risk. And these issues are really manifested. Let me give you an example to illustrate. So say, for instance, in recent times, SEBI has come up with a whole host of regulations to facilitate direct movement of funds and securities between the investor and where it needs to go, whether the exchange or whether, in the case of an IPO, to the issuer. what is the objective here? The objective is if the money or the securities pass through many hands, there is a structural vulnerability at each stage. And because we don't want to curtail and put huge requirements of net worth and so on, let's say, on the broking system. We say, no, we only want very large brokers, so, minimum net worth of 1,000 crores. Okay, then there'll only be a handful of brokers, but that's not what we believe in. We believe in competition. So, the attempt is you eliminate the possibility of wrongdoing through technology and through process re-engineering. And we have done that systematically, those of you who are aware, for instance, in terms of posting collateral with the clearing corporation. It's now done through a pledge-repledge system of shares instead of the shares actually moving and passing through different hands. So it stays in your account, pledge is created, then a repledge in favor of the clearing corporation is created. The shares never move. Similarly, you know that we have ASBA for the IPOs. So in that, the money never moves from your account. If you get an allotment in the IPO, that much money is taken. If you don't get an allotment, nothing is taken. We are now actively engaged in looking at ASBA like the secondary market. So if it can be done for the primary market, why can it not be done for the secondary market? So again, if you are buying shares and you have to settle, the money should never leave your account. When it needs to be settled on T+1, because as you know, we're rapidly moving towards T+1, the money will be appropriately taken. So the attempt is to reduce structural vulnerability. Again, therefore, if your business model is such that it will increase concentration risk or structural vulnerability, chances are sooner or later the regulator will move to eliminate it. So this, in summary, are the set of principles that should guide every entrepreneur in the fintech space and everybody who is funding, because when the regulator comes up for regulation, to bridge that regulatory gap that you are seeing today, these are the kind of principles that they will follow. Having said that, given the pace, that one's not mine, it doesn't matter. It's good to think anyway. So the issue really is that today, as we stand here in India, we are well aware that we are setting the pace globally. And that is what makes us really proud. And I can assure you that as a regulator, when we meet people from overseas, the pride we take in sharing what the market participants are doing and what is the level of innovation that is happening in the country, it is something that's indeed a matter of great, great pride for us. So with that, I conclude and happy to hand over in respect of the Datathon. Thank you.
Right, thank you very much, ma'am. I think this was something phenomenal, and we don't hear regulators articulate this in, I mean, because you lost the last slide, I'm just repeating for the sake of everybody. I think you gave us a checklist for all fintechs and startups to look for, especially keeping what products to build. And here is what you said. Don't build on anonymity. Build on data, which is credible, second. Build regulator supportive and inclusion. That's a part that you talked about. Avoid building barriers to exit. Fantastic stuff, because all fintechs thinks about lock-in, and this lock-in part needs to be kind of not encouraged. This is something interesting that you talked about, and the account aggregator framework is something which is breaking this, which is don't build on public good rails, and don't build on something which will lock in the data, which will build infrastructure which is exclusive to you. And finally, I think this is something regulators always do, which is reduce structural vulnerability, or else eventually regulator will come down heavily on models like that. Very powerful, very key messages, and thank you very much for doing this, ma'am. Like I said, we had, under the aegis of SEBI, we encouraged startups all over the country to come and do a Datathon with us. I wanted to give you a 2 minutes presentation on what this Datathon was all about, and then we will invite the winners of the Datathon to talk about their models. If you can just cue the presentation, please. Can you play the presentation? Okay. Next slide. So we worked on two concepts in the Datathon. One was visualization of performance. Second was a forecasting of trend. And we can go quickly around this. Next one, please. We were really, really surprised. Even though the Datathon was just 2 weeks ago when we started, we had 903 registrations across the country. 590 teams actually, registered and joined this, and total 112 submissions. There were teams which were group of 3, 4, 5, so 112 plus submissions, which was one of the biggest that we have done in a very, very short period of time. So that talks a lot about the kind of innovation, that kind of work that the startups would like to do. Next slide, please. Yeah, you can just go back to the previous one. So like I said, just the previous one, please. This was a very, very short one. We started on September 2nd. By the time we were out, it was last week, right? So we were very, very fast. We were able to do that. Next slide. And we had some very eminent jury. Nitin was part of the team. Mr. Ranjit Pawar from Refinitiv. Thank you. Avnish Pandey from SEBI and Mr. Prabhas were part of the team. And so we went through the top 10 teams. And this was just a glimpse of how everything happened online. We saw the presentations online. So we looked at 4 parameters. One is the novelty of an idea, very critical because it's innovation. 2, technical feasibility. Scalability of the model, very important. You can come theoretically say anything. And of course, business feasibility. Was it really worth monetizing? These were the top 10 winners out of the 100 plus, we kind of screened. And today we have 3 top winners here presenting their, data models and visualization. I'd like to invite the 3 winners if you want to announce. Thank you. Yes, please.
Yeah. Thank you very much, Mr. Jain. Well, that being said, as we were focusing on the Datathon presentations right now, let me quickly invite, first up, Team Golden Hen to please come on stage to share their presentation with us. And while we're talking about these young startups, while we're talking about these young ideas, can we have a youthful round of applause as they all participated in this very, very pertinent competition? And here they are, Team Golden Hen, first up.
A very good morning, everyone. I am Moini Sharma from Team Golden Hen. Okay, so at some point, we all were new in the stock market, unaware of fundamental analysis and technical analysis. But with time, we have acquired knowledge by using a forecast trend. But this is not the case with the IPO. We don't have evaluation metrics for such IPOs. So here is the solution. So I came up with a dashboard where you enter the fundamental entities from the company's IPO fundamental report. So on entering these entities, you will get a scorecard from 0 to 100. The higher the score, the better the stock is. Okay. So this is the data set I have taken into consideration. And the first row we see there is a company market cap, sales growth. This you can find in the fundamental report of any IPOs. Okay. So I'll just directly go to the dashboard. Please play the video. Could you please play the video? Okay. So this is how the data set dashboard looks like. So if a person is new in market, he can directly look from the keys. Like if he is not aware of some fundamental keys, he can just directly look from this. And on the left side, so on the left side, you see that there are entities we can just enter on the left side. And on entering, I'm taking this from the data set. on pressing the submit button, okay, so you get the scorecard. So could you just please close that tab? Okay. So right now I'm in the backend, I'm changing the value of the market capitalization. So you see that the scorecard has been, now will be get changed. So now you see the scorecard has been changed. Now I'll change another value, which is the ROCE. I'll just changing from the 14 to 13, and then the scorecard value has increased. So this is all the like idea which I have taken into consideration, like how the IPOs and the fundamental reports can be very helpful to judge whether the IPO stock is good or not. Okay, moving to the next slide. Can we move to the next slide, please? Okay, this is all I would like to conclude. Thanks a lot.
Thank you very much. I was just inquiring why is it named as Golden Hen? Jaise kehte hain ki sone ki murgi. That was the entire storyboard around it. But kudos indeed on that very interesting problem statement and the solution that you shared. That being said, let's quickly invite the next team. We have Team E-Lint. So if I may please invite Team E-Lint. And can we have a round of applause once again? Let's hear out another interesting idea coming your way.
My name is Sumit Jha. I come from a very beautiful place in eastern Bihar called Mithila. I am representing here my company, Elin Data. It's electronic intelligence, and we know data. So, okay, quickly. So, our problem is simple. It's data. We exist because there exists data. Imagine a balance sheet. In one side, you have assets. So that data balance sheet, and when I'm talking about asset is my friend like Manish. He's creating asset literally out of data. But we are from liability side. What I mean by that, especially fintech world is full of scam, is full of those companies who could not see the light, and as ma'am was already explaining. So what we are bringing is very simple, three things. It's a C, C, and T. We want to take help of community. What they can help? They can make those black box solution which claims that you will get 7x, 10x, God knows how much. We are bringing something called explainable AI. It's a big debate these days. So backbone of our solution is this daunting looking image. I might bore you explaining this, but I will tell you what we have done. Using the same data platform, we have encouraged companies like With. We are in talk to companies like Credit Nirvana. We are helping them creating a mini Miranda rights enabled collection framework. Not only that, not to deal with PI's data, PHI data. It's a big problem with fintech companies. They should not, they can't simply play with your Aadhaar, PAN, or health information of, let's say, Amitabh Bachchan. So removing, masking, encrypting those PI's data is one of those challenges. What we are bringing in terms of transparency and compliance is, we can enable the same platform which we are proposing, and we have made a small video for that, proposing that as long as you can ingest the data in this platform, you can build those competing solutions, as ma'am was saying, to cross-check it. You can mask those PI and PHIs. Not only that, it can plug and play all those solutions which my friends are proposing, and see yourself, you are an investor, if you're a regulator, or any stakeholder in the ecosystem. So that's all about our offerings. And quickly, the video we have made, it will hardly take 1 minute. So what was happening there? We were on real time ingesting it. Here, what we are doing, we are comparing one result from some very popular technical analysis, and another we are integrating APIs from Facebook Profit and plain vanilla so-called RN model. And there we are trying to explain why, even if some model is saying that something will go down, but the competing AI solution in the model might say differently. So that's what is happening there, and which we are calling XAI, the explainable AI. And coming back to the main meat where our data platform can help is this rage trail. Here, we are just trying to figure out something very popular called earnings management. So this platform is enabled for any sort of data, be it PDF, be it voice, be it video, whatever you imagine, any kind of source. Here, we are trying to figure out if, let's say, Infi is a benchmark in the beginning they have done. They changed their accounting system and they said, we are profitable. So if that is the benchmark, what about these new incumbents? How far they are if we compare their filings, whatever they are claiming. So it's just a glimpse what this platform can do. Only sky is the limit, because all the rules, all the activity like earnings management is just a plug and play. That's all. We are Ellen Data, we know all about data, so you know whom to contact if you have such data. Thank you. Thank you, everyone.
Thank you so much. And with that, let's also invite the next team. We have Big and Short on the stage. Can we have a big round of applause, ladies and gentlemen, for another very, very innovative idea? So let's invite Big and Short.
Good morning, everyone. Just waiting for the slides to queue, which they have. Thank you. Good morning. My name is Jain. This is my partner, Himanshu Goyal. We like to call ourselves Team Big and Short. The problem we have presented today is one on derivative pricing through underlying asset predictions. Next slide, please. If you have a controller for that. Beautiful. Wonderful. So I think Madam Chairperson very eloquently put this out earlier. The existing models, the existing AI models at least, happen to be black boxes. They are quite complex, and they kind of thrive on overfitting, which is essentially a problem for anybody trying to use these models to understand why they came up with certain predictions and try to sort of back calculate what the underlying math was. What we propose is could you just move? Yep. Wonderful. So what we propose is a more mathematical solution, which is to actually allow the user to tell us what factors they deem important for a particular market. And what we will do is give you a tool which will inculcate those factors, build a stochastic model, and calibrate that on information that you deem important, and give you possibilities of what future paths will look like. An important factor here is to sort of understand what we deem important for a solution. So these are the three factors that we believe are the most important for any model which claims to do any sort of prediction. Any sort of solution needs to be scalable, it needs to be transparent, and above everything else, it needs to be tractable. You need to have the ability to be able to explain how you were able to get certain predictions and why does your model do whatever it does. We do have a small presentation at the end, a small video just to show what the prototype looks like. So maybe we can just move to that, and if we can play. So these are what the inputs look like. You can, in a sense, select an asset and select what factors you as a user deem to be important for that market. All information we have used here was sourced from SEBI's website. That essentially led us to NSC's data mine, and we were able to extract a bunch of information. I believe the example here is for Nifty 50 futures, Nifty 50 as a stock. You essentially select some parameters, a calibration period, and we will be able to simulate paths for what our stochastic model believes are possibilities in the future. Now, we don't claim any of these to be accurate in terms of alpha hunting. The idea here is to just create something mathematically sound and allow that to be available to the end user for any analysis they want. The example there, I believe, is for you to look at a confidence interval at any future date with a given confidence rating. Again, all of this is extremely scalable. You can select what you believe are important factors for a given market. You can play around with those factors. You can change calibration periods. The idea here is to just give you something very transparent and just give you a tool for you to be able to quantify your understanding of a given market. Yeah, that's our pitch. Thank you.
Alrighty, thank you so much. And with that, ladies and gentlemen, we'll also announce the winners of the Datathon, and let's also distribute the prizes. So if I may request you to please do the honors. Ma'am and sir, I'm going to request you to please step forward. On that note, let's also announce the winners and the runners-up as well. So first up, let's hear it for the second runners-up. Golden Hen it is, ladies and gentlemen. So we'd like to once again invite Team Golden Hen to please come on the stage. We can also have some fanfare and some music as well. Let's do that. Yes, lovely indeed. Congratulations. Well, that's a giant check out there. For the second runners-up, Team Golden Hen, ladies and gentlemen. We'll ensure that the real check comes. While this is something that looks really good, so we're going to quickly invite the first runners-up, Team eLint. So let's invite eLint on stage as well, the first runners-up for the Datathon. Congratulations. And with that, let's announce the winner. Big and short it is. So let's heighten up that applause, because the heights was also the reason for that name, Big and Short, ladies and gentlemen. The winning team is walking away with a check of 1 lakh rupees. Congratulations to the team, Big and Short.
Thank you very much. Ma'am, indeed, it's a pleasure. It was a wonderful session. Thank you for encouraging this, spending time with us. And I wanted to check if you have time for a couple of questions or... Right, thank you very much, ma'am. If any questions, we'd like to direct ma'am for at least 1 or 2. Anybody? We have mics around there. I would request if you can keep this relevant to fintech. No, I think there's a mic behind you, just behind you.
Hello, ma'am. Good morning. It's a lovely presentation as always. I just want to understand, in this place where we are, right? There's so much about blockchain, about crypto. I mean, everything associated. But still, from the regulators, we've not heard much as far as this conference itself is concerned. From the government, between the RBI, there is no certainty on which side has it gone to. I want to understand from you, from SEBI's perspective, how do you look at the scenario? Have we reached where some decision can be taken in terms of regulating it? We've heard about taxing it, but not regulating it. How do you see it from your perspective where you sit?
So, the complexity of the issue is simple, right? Because given the nature of technology, this technology can manifest itself in any form, right? What do I mean by that? It's like water. Water will take the shape of the vessel in which it resides, right? So if we talk about tokens, tokens can take any shape or form. If the underlying is a security, it will acquire the nature of a security. If the underlying is real estate, it will acquire the nature of real estate. If the underlying is in the nature of insurance, the token will acquire. So the complexity arises because it does not have a singular character, right? So the question that will arise in due course, and in any case, the Reserve Bank of India has announced that the central bank digital currency will come along the way. So that progress in terms of the technology and everything has already been announced. Once that comes into place, because that is the equivalent of the public good infrastructure. So back to the concept that the rails on which anything can be built will be public infrastructure, and that the Reserve Bank of India has announced. Once that rail is there, what is it that private entities can build on top of that rail is really going to determine how it will be regulated, and it will depend on what is the nature of what is being built, because as I said, it can acquire any form. So I think we'll need to wait and see, but conceptually, you have the rails and you will have the locomotives on top of it, and depending on what the locomotive's underlying is, it will be suitably regulated. So it is complex, but conceptually quite simple.
Good morning, ma'am. My name is Amol Data. I'm heading etbfsi.com. Meaningful perspective here. Since you mentioned about the data, the public data and the private companies should not charge for it, the data protection bill is still not pending. We haven't heard from the policyholders much about it. What is regulators' view? Because what I see specifically fintechs and startups have been using, I don't want to say misusing the data, far more aggressively, and data is everywhere. So what is the regulator's view specifically on controlling the data and the data privacy? Maybe for SEBI, it's investors, for RBI, it's bank customers, and for IRD, it's policyholders. So if you could give us some thoughts there.
I think the answer to that lies in the account aggregator system of the Reserve Bank of India. It is an absolutely amazing piece of work, and which is why SEBI has very wholeheartedly and very happily joined in to that initiative, because what that system ensures is both data privacy, but more importantly, equally data empowerment. So what that concept really says is, I as a citizen of this country have the right over my own data. Data that somebody else is holding as a fiduciary or as a business, they are free to use it for the purpose that I have agreed to give it to them, but over and above that, I have a right to my own data. So I have the right to pull my data, and I have a right to push that data to whosoever I want. So the whole consent architecture of the account aggregator is designed in a way to ensure that a citizen is empowered with his own data, and nobody can say your data is proprietarily mine as a business and I refuse to give it to you. So this is at the citizen level extremely powerful, and there is more and more data that is now going into that system, and we expect to see that flourish, and I think it's only a matter of time before the account aggregator system becomes as omnipresent as the UPI system. So it's just right up there in terms of its strength and its capability. When it comes to regulation, our philosophy is aligned with that concept of saying what is the investor's consent. So if the investor consents that as part of my contract with you, I am willing for you to use this data for this purpose, we are very happy. Hum kaun hote hain to say yes or no? But the presumption that somebody makes that now that I have your data which I have collected under this contract, I am free to sell it or cross-sell or do whatever. That presumption cannot be made. And I think that there is enough already in our regulation. Yes, it will be wonderful when the data privacy bill gets adopted and so on. But I don't think we need to wait upon that. I think there is enough already for us to proceed on the basis and on the assumption that you cannot assume that the data is yours to do as you wish and particularly to sell it. That presumption cannot be made. And more specifically, I will give you an example. For instance, the mutual fund data. So, as part of the discussion that the regulator had with all the market participants, there was an explicit articulation by the industry association as to who owns that data, who can access it, and for what purpose. So, SEBI facilitates this on an ongoing basis, and we really don't need to wait for any new regulation to come. The direction is very clear. Data privacy has to be ensured, data misuse cannot be permitted, and data empowerment is a must. The citizen has a right to his data.
Ma'am, I see a lot of hands up, but maybe we'll just take one last question.
मैम एक ब्रजेश जी बिजनेस से मैम दिस साइड मैम डेटा प्राइवेसी का ही सवाल था इससे पहले का तो हाल में कुछ ऐसी घटनाएं हुई हैं कि क्लाइंट के डीमैट की इंफॉर्मेशन जो है वो लीक हुई चाहे वो ब्रोकरेज हाउसेज से लीक हुई या कहीं से लीक हुई और उसके बाद बड़े पैमाने पर क्लाइंट की सिक्योरिटीज़ का मिसयूज़ हुआ तो इस तरह की चीज़ों को रोकने के लिए क्या आपके पास थॉट प्रोसेस है क्योंकि आप कह रही हैं कि फिनटेक में आप काफ़ी पसंद करती हैं फिनटेक वर्ल्ड को तो क्या उसका इस्तेमाल होगा टेक्नोलॉजी का और दूसरा सवाल ये है कि जो सर्विलेंस का सिस्टम है वहाँ पर आप फिनटेक का किस तरह से इस्तेमाल बढ़ाएंगी ताकि जो गड़बड़ियाँ होती हैं उनको रोका जा सके
देखिए ये जो डेटा लीकेज का सवाल उठता है आई थिंक उसमें बहुत सीधी सी बात है हमारी रेगुलेशन है ऑन साइबर सिक्योरिटी और उसमें जो रेगुलरली वीएपीटी करना चाहिए लोगों को वल्नरेबिलिटी असेसमेंट एंड पेनिट्रेशन टेस्टिंग वो किस तरह से होना चाहिए वी हैव टेकन स्टॉक कि जो बड़ी इंस्टीट्यूशंस हैं हमारी मार्केट में वो सही तरीके से कर रहे हैं कि नहीं तो हमने जो जब ये रिव्यू किया कि ये हमारी रेगुलेशन तो काफ़ी पुरानी है लेकिन जिस तरह से इम्प्लीमेंट किया जा रहा है वो 100% सही नहीं है या कॉम्प्रिहेंसिव नहीं है तो उस तरफ से हमने और उसको बढ़ोतरी दी है कि उसमें कवरेज ज़्यादा होनी चाहिए और उन इंस्टीट्यूशंस को बड़ी इंस्टीट्यूशंस को एक टाइमलाइन दिया गया है कि आप फिर से वीएपीटी करें और वापस हमें रिपोर्ट करें तो ये एक ऑनगोइंग जर्नी है और साइबर सिक्योरिटी का जो थ्रेट है वो हमेशा रहेगा वो दैट इज़ द फ्लिप साइड ऑफ टेक्नोलॉजी और उसमें हमें बहुत ही सतर्क और तैनात होना पड़ेगा सो दैट आई कैन अश्योर यू दैट गोइंग फॉरवर्ड द एम्फसिस ऑन साइबर सिक्योरिटी इज़ गोइंग टू बी वेरी वेरी क्लियर and the emphasis on ensuring that the investors' data does not leak and that there is accountability for it is certainly going to be ensured. In terms of surveillance, I think पूरी market बात ही कर रही है कि आजकल से भी काफ़ी टेक्नोलॉजी का इस्तेमाल कर रही है और उसमें हम और इन्वेस्ट करेंगे हमारी जो टीम्स हैं उन्होंने बहुत ही उम्दा काम किया है इस एरिया में और भी हम आगे जाके उसको करेंगे इसीलिए अब फ्रंट रनिंग के केसेस इनसाइडर ट्रेडिंग वगैरह के केसेस जो हमें पकड़ने चाहिए वो अब उभर के आ रहे हैं क्योंकि मार्केट में होता है ये आप भी जानते हैं हम भी जानते हैं तो टेक्नोलॉजी के यूज़ से ये अब ज़्यादा से ज़्यादा हम पकड़ पाएंगे
Sir, madam, may I ask
Last one
I think,
question. Just a short question, sir, if possible, ma'am.
ma'am, up to you.
It's up to you how you're running on time.
Maybe we'll take one, last one.
Okay.
Right,
Thank you, ma'am. Thank you, sir. I'm Khushbu Tiwari from Business Standard. You in your presentation mentioned that you could be working in going ahead for ASBA in secondary market. What could be the hurdles that you could face and by when could be the implementation? on the same?
देखिए, where there is a will, there is a way. तो हम तो यही बिलीव करते हैं कि देखिए जहाँ पे आपका विल होगा, आप जो हर्डल्स आएंगे आप किसी ना किसी तरह से उनको ओवरकम करेंगे. और टेक्नोलॉजी इज़ सो पावरफुल. देखिए, अगर कोई बाबा आदम के ज़माने में रहना चाहता है तो हम उसका कुछ नहीं कर सकते हैं, लेकिन जो टेक्नोलॉजी को अडॉप्ट करना चाहता है, it is very clear all hurdles can be resolved. They are merely operational issues which have to be ironed out. And I think that in a few months, with the help of technology, we will get there. I don't think there is much debate about it.
Sir, madam, I really want to squeeze in
I would say, we'll run late for the next talk. Thank you very much. Ma'am, this has been wonderful. You've been very open, very frank, and a lovely session. Thank you for giving more than what we deserve from your time. We really appreciate it. Thank you for coming here and blessing us, ma'am. Thank you. Thank you, everyone.
Ma'am, if I would also request you to come together for a quick photograph. And can we have the loudest round of applause, ladies and gentlemen, for that very insightful session and for gathering a lot of clarity, a lot of insights from Madhabi ma'am. Thank you so much indeed for joining.